Ladies and gentlemen of the crypto space, we're live on a Wednesday, January 26th at 12:04 p.m. A little late today. My back is shot, and I'm going to try my best to give you some meaningful content on a day. The Fed is going to talk. Equity markets look like they're rolling over. Are they going to roll over? So, we could digress and talk about fundamentals of macro financials and reality, like Stephen Van Meter and Jeff Schneider talk about, which is probably some of the most meaningful content there is. It doesn't mean assets don't go up if the system is extremely deflationary, and that's the bottom line. The system is completely deflationary from a monetary supply perspective, which is exactly why euro dollars were created and exactly why my 2022 thesis is focusing on stablecoins as they have a capacity to attempt to meet dollar demand. We have a system of global hegemony where the dollar rules everything, every country, every sovereign, every corporation has dollar denominated debt. They need dollars. The system wants to implode. If GDP drops off a cliff, where the hell are they going to get the money to service their debt? The system is crying out for deflation. And all this Fed monetary policy talk is a conversation that they have with themselves, whether how damn deflationary the system is. And they play this political game where, the administration's talking about inflation. Inflation is bullshit, what they're talking about. It's such a talking point. Clearly, there's consumer price inflation, but the administration did say something that was meaningful, that the consumer price inflation was predominantly caused by supply shortage. And that makes sense because we have no manufacturing base left in this country. The entirety of it is outsourced. Shipping is all congested, and no country they're all going through the same exact shit show that we're going through politically as well as health wise in almost all regards. The entire system is disrupted from a supply perspective, and demand has been maintained. Why has demand been maintained? Because they bailed out everything in 2020. So they kept the system going. Under normal circumstances, the system would have deflated. Equity markets would have been completely collapsed. Domestic and a good part of international enterprise would have been completely annihilated because of their debt obligations, and there would be basically no demand, and we would have been in an extraordinary recession, if not full on extreme depression. And then you wouldn't have inflation, consumer price inflation. You see how that works? You either crush demand, where people are in a state of austerity, or you meet supply expectations. The equation is simple. So, what are we on the precipice of today? We'll digress into equity markets. We're on the precipice of a deflationary implosion. Why? Because the markets are all governed by psychology, and right now people are like, "Oh, it's rolling over. It's below meaningful levels of historic resistance." I mean, look at this. I guess you could consider this support in some regards, but I like to see historic resistance flip support. When you see a historic support held as support underneath the damn long-term moving average, this chart looks like shit until it gets above the 200 SMA and the weekly. In a decent condition with regard to the long-term moving average, the 50 SMA and the weekly, albeit until it gets above that 200 SMA and the daily, we're in a shitty situation because the 200 SMA carries more weight than a 50 SMA. So this is a weak position, in my opinion. Crypto markets are holding up pretty nicely. And we can circle back around to the topic I wanted to hit on, fundamentals or everything. But that's not what people think. That's not what the way people think about fundamentals is so off base. How much APY is it giving me? How much inflation is going on in the asset? Is there any buybacks for deflation, deflationary pressures? What's the circulating supply? That's some baby back bullshit. That's just not the way to look at these assets. Why? Because you need inflation. Without inflation, you don't have growth. What you need is controlled inflation, which is exactly why I turn to historic monetary policy of sovereign nations. Look, the U.S. targets 2% inflation for a reason, because you need inflation. You have a growing population, you want a growing user base, you need more assets to go around. But what you want is controlled inflation. So you need inflation. The only difference And the reason why the crypto markets excite me so much is because there's only one difference between, at a psychological factor level, between most recent crypto assets and every single other asset in existence, whether it's an equity market or the vast majority of the crypto space. Only difference is cash flow. The only novelty at all in the crypto space compared to 2017 or whatever the hell cycle you want to reference is disintermediated access to protocol cash flow. I say this because the only thing that ever interested me back in equities land all those years ago was REITs, because there's a mandate to distribute the cash flow of the business to REIT equity holders. The problem is they screwed it. They destroyed it. It's useless. I could care less about 2, 3, 4%. You're going to get nowhere. You're going to have no cash flow. You need $20 million on 4% to have something decent. So it's completely useless. Why did it become completely useless? Because they diluted the share base. And they do that to raise capital instead of using more rational means, like a portion of cash flow to increase cash flow. Cash flow generates cash flow. You divert a portion of cash flow to buy a new cash flow asset, you're going to contribute positively to cash flow. Instead, they issue shares because every dumb son of a bitch on the equities markets buys these shares because the stock price is going, oh, it's the most stupid thing. And that's not the way to look at the crypto space. And the entire equities market is garbage. There's not a useful asset in the entire equities market. There are useful assets in the crypto space, but they're few and far between. There's only a few that are remotely interesting to me, which is why my damn portfolio is so concentrated. More recently, you have these disintermediated options markets. DYDX is completely useless. It's a useless asset. And that doesn't mean the price doesn't go up. That doesn't mean it's not a solid business and a powerful platform. Doesn't have a massive TVL, transaction volume through the roof. That doesn't mean any of that. It means it's a freaking useless asset to hold. It pays you nothing. It's worthless. I don't want to get paid. I don't want to get an asset for governance. That for some billionaire or some bureaucrat. I want an asset to pay me. Goodfellas, Paulie, fuck you, pay me. Nothing else matters. There's no loyalty in any capital market. If an asset isn't paying you past a critical psychological threshold, it's going to be sold. And that critical psychological threshold is that the asset is paying me not enough that I don't care for liquidating. Isn't that simple? Assets need to pay hand over fist, otherwise they're going to get dumped. They're going to get sold the second the weakest market actor in the room decides to liquidate because they didn't put on their underwear correctly for the day. Now we got prime examples of that, and I'm not going to delve too much into Wonderland aside from the malicious, the malicious activity. But the prevailing market actor in the protocol is weak. They have no idea about cash flow. They see 80,000% returns, or however much it was when time rebasing was active. And sure, that worked great for a capital raise. In fact, I think the mechanism of Olympus Dow and what Wonderland tweaked with their relatively large APY display was brilliant from a capital raise standpoint. But the complexity is it attracted the weakest of market actors. Persons that don't exercise due diligence are susceptible to emotional impulse and don't assess assets from a critical nature. And I'm a reductionist. I know most people don't think the way I do, which is exactly why I started the damn stream. And I see the world in terms of binary, yes and no, up and down, team A, team B, political party A, political party B, left, right. The whole thing of humanity, the whole whatever of humanity reduces to binary choices. Maybe that's why binary options was always interesting to me. So it's either sell or hold. It's either you meet a critical threshold where people are paid enough to not want to sell, or you don't. If you don't, the asset is going to implode. You see this asset on the screen right here? It's completely useless. This is the S&P. SPY or whatever ETF you want to choose. It's useless. Does nothing for the average citizen. You need 100 million, $1 billion to even get a remotely decent return from a revenue perspective. You look, the darling of the REIT space, Big O, Realty Income Corporation, 5% on your money. What the fuck are you going to do with 5% of your money? What the hell are people doing with cash in a bank account? You're getting nothing on your money. Nothing matters more than cash flow. That's it. We're going to look at some crypto charts. We'll see how much my back holds up. We'll see what we can do. ICD's in the house. Fenor, howdy, Dan. Alex, up Noah, can you give your thoughts on Solidex? Completely off the radar, no interest. Patrick, so tempted to get back into GLP. Patrick, there you go. Disintermediated options markets where uh, capital allocators can provide liquidity to facilitate leveraged options trades. GLP is very interesting. In theory, it should have a relatively stable price point, as GLP is the price point of GLP is a manifestation of net P&L, profit and loss. So that's interesting. I'm very much looking forward to Solidly. Everyone is completely red herring the shit out of VE33. They don't know anything about the way it's going to function in production, and these DAOs that popped up on Phantom are just yet another manifestation of pathetic degeneracy. Uh, you know who capitalized? You know who capitalized the best on those DAOs? Yearn position, a MIM position that literally deployed stables and sold the garbage asset, instead converted into stablecoins. Um, that is a solid way to capitalize on degeneracy. I'm not cynical. I'm realistic and I'm rational. You know who has one of the best portfolios in the entire crypto space? Justin Sun. His portfolio is brilliant in that it's simple and it just extracts rent from rampant market degeneracy by extracting yield from stablecoins. Incentivized returns are compounded the stablecoins. I mean, it's literally an up only portfolio. There is nothing to be cynical about. This is a game of survival. This is a game of seeing predators for what they are. There is a capacity to generate meaningful returns, exercising degeneracy. But the complexity there is the vast majority, 99.9%, lose. They lose, it goes down, and depending on their skill, maybe they lose more than they put in, and it's just really bad. Maybe they learn over time and they adjust their strategies for how to engage with the markets, and then they start losing less. And eventually, maybe they start to understand the game of the predators versus the sheep, and then they start to outperform by getting into assets at an opportune time, extracting capital from the degenerate behavior, piling into an asset, and then you sell. Because that's all this is a game of. All right, fine. Maybe I do sound a little bit cynical in my old age. Rupert, what's up, champ? Any news on multi-staking? Well, no. Um, got a great entry at 2% of portfolio rational. 2% of a portfolio is rational. I can't argue with that. My logic and reason, uh, my reasoning that have gone into my portfolio structure heading into 2022 has shifted, and I've adjusted. Uh, any or multi has become the largest position in the portfolio, above curve. Curve only exists in the form of VE curve. Convex is going to be removed from my portfolio. It's a relatively small position. Convex is currently sized at 5%. I believe I have a lock that comes up today. I'm going to liquidate. Why? Because of the chain of events. Who controls curve? Convex. Who controls convex? Basically, I don't have that screen, but it's Frax is one of the largest controllers. Wonderland's up there, Redacted's up there. Badger is a strong controller of convex, so I do not need redundant components of the portfolio to express a narrative, and that narrative is curve. So bear in mind, you guys see where I'm going with this. So I'm a strong advocate of what Curve has created, not because its monetary policy is great, but because of the synergy between Curve and Convex protocol functionality, have created basically an MMT money producer where gauges are just extraordinarily powerful, and it's an fascinatingly powerful moat. So I don't need to own Curve. So that's what I'm realizing, and I don't need to own Convex. What I need to own is the protocol that owns Convex. And in turn, what's a little disappointing is as the following years, we go into the future. Eventually, someone's going to want to control the controller of Convex. So I'm not too fond of that sequence of events. But as of right now, if you own Curve, Convex, and Badger, Redacted, Wonderland, W Memo at this point, or Frax, FXS, you have three positions to the exact same narrative. So I have realized this and I have adjusted accordingly. So I have a very large curve position vis-a-vis expressed through Frax. Who controls convex? I have a very large convex position. If convex outperforms and does extremely well, if curve outperforms and does extremely well, who controls convex is going to indirectly outperform as well. There's the rationale there. The portfolio balance was excessively weighted to the curve narrative. So while I won't have curve and convex in the portfolio, I am heavily exposed to the curve narrative vis-a-vis a 17% position in FXS. Let's keep it going. Let's keep it going. Some good content, all things considered. How shitty I feel. No screen showing. It should be back in a minute. Oh, damn it. I haven't flipped through any screens. I forgot to pop it over to the main screen. I'm sorry. So no worries. I barely showed anything. I showed the curve page, and we were looking at the S&P futures. I haven't showed any screens yet. Let's go through the comments. Hey there, any thoughts on Daniel Fudd? Yeah, it's complete Fudd. He's a good guy, and it's not easy. It's not an easy situation, and I have good feelings about protocol iteration. What have we talked about as a major narrative heading into 2022 is protocols iterating on their tokenomics and their monetary policy. So I like that they're thinking about that. I'm sure they're getting a lot of feedback. I know myself, I have put feedback into our little private channel where I talk to these guys. I've given my feedback, and I have a variety of interesting tokenomics models that I look forward to seeing and encouraging the deployment of in 2022. I think there's a lot of powerful things that could be built based on historic precedents of sovereign monetary policy and status quo monetary policies presented by successful crypto protocols. Um, GMX has some nice components. Obviously, the curve convex relationship, even Olympus with its capacity to raise capital, the notion of selling discounted assets. That's a very meaningful strategy. You use treasury to purchase things. It's a capex. And how do you make money? You make money with revenue streams. And how do you keep users from selling your assets? You pay them. So I have a couple of good ideas. We'll see if anyone picks up on some of them. And a lot of my observations are considered of V33, Olympus, Curve, Convex, GMX, and their vesting periods. So that's a very interesting characteristic or attribute that they've deployed. I'm not parking my MIM currently. I'm waiting. Yearn could potentially be a decent automated liquidity provisioner. So I talked about that on Twitter. I'm looking forward to automated single-sided liquidity provisioning. Um, I wish that urine was more real time. So obviously, there's no real automation at the EVM level, but there's things like keepers and a variety of other, was it gelato and a variety of other automation techniques that could facilitate, contract updates to, to manage and distribute capital, so on and so forth. But you could also handle that just via strategic programming and data management and calculations. I want to see real time yield. The closest thing to real time yield thus far, actually, that Aave and Geist and Blizz, you got real time yield, but those protocols basically suck for anyone that has less than $100 million. So that's another story. But Curve and Convex, well, Convex does very well with displaying, real-time yield. Was it update like every 30 seconds? I don't know, something like this. So that's very interesting. I want to see if I put in X amount of money, how much money am I getting? I want to know every 30 seconds how much more money I made. And if that number shows me a good number, I'm not going to want to sell the asset because I like the yield. It's good. It's valuable. It produces cash flow to pay bills, to live, just like a job, just like a salary. Unless I see that number that I have earned go up every so often, every second, every 30 seconds, I'm not I'm not enthralled. I'm not intoxicated by the protocol. There's something that is missing that hits a psychological threshold that will convince the shallowest of market actors to not sell. Otherwise, it's going to get sold. Show people how much they're making in real time and pay them a lot of money, and they're not going to sell your asset. That's the deal. Crypto bets hand over fist. Did you read Bianco research report from yesterday? He goes in the case for large decentralized stablecoin growth. Well, I see stablecoins as the most likely successor to the euro dollar for a variety of reasons, and we're just in a period of extraordinary deflation. If you really follow Jeff Schneider's work, it's devastating. I don't see how they. Well, frankly, Fed funds rate. I don't see it affecting inflation at all. Uh, Other than psychologically just saying, oh, the rates are up, and everyone just says, oh, this thing's going to fucking roll over. So more of his rhetoric and the way he talks about the economy, I think, are more meaningful than rate hikes. There's, obviously we see historic correlation with the balance sheet and equity markets. Correlation is nice, but the bottom line is you want to reduce this whole thing to the situation. The system is extraordinarily deflationary. There's not enough capital in the system to facilitate demand. And more importantly, the debt to GDP ratio. That's the bottom line. Um, I retweeted a tweet this morning that was really good that highlighted about 1,000 to 1 of debt to GDP. That's all things considered: sovereign debt, household debt, Medicare, Medicaid, entitlement, so on and so forth, Social Security. And if that's the case, this thing's going to deflate like mad. This stock market's going to implode. Industry is going to completely collapse, and the only way to resolve that is to inflate the system. And this is exactly what Rudy Havenstein went through at Weimar, Germany. Because if there's been no, Luke Roman talks about every country in history, like 99% of them, that have had a debt to GDP of 130% sovereign debt. They all went through hyperinflation, and none of them have been crushed by deflationary implosion. There's a reason why, because none of them went the deflation route. None of them wanted to express austerity onto their citizens. None of them wanted to be in political office as the general public is ready to wring their necks for the economy completely imploding. Their political office would be gone and be given to anyone else. It'd be a complete rotation of Congress and Senate and the other positions. And that's just something politics can't handle. Where we are in this market, if this thing deflates, you're talking about worse than the historic depression. You're talking about 2020 just keeps on going, and it's just gone. And the only thing that'll have value left is dollars and bonds. And there'll be no enterprise because it'll be completely crushed. All their debt will explode. They won't be able to have the cash flow to service their debt interest payments, and it'll just be a disaster. So Rudy Havenstein said he didn't want to be on call for the revolution, so he kicked the can. And this is where we are. The system is screaming it wants to deflate. And the only way to prevent deflation is to expand the monetary base. And to expand it immensely, multiples. So we're going to see what they're going to do. Either they're proactive or reactionary. Historically, they're reactionary. The system tries to explode, and that gives them political cover. So maybe their game plan is to raise rates, start to taper, let the system completely collapse, and that'll give them the cover they need to print 10 trillion. $100 trillion because that's what they got away with in 2020 because they needed to do it to be the almighty saviors of the economy. So let the system collapse again. And now they have the political cover they need to be the saviors again. That's interesting. Pretty interesting. DeFi Kingdoms is off my radar. The only game stuff I'm into is Gods Unchained. Killis, good morning. I wish Danny would take the world on his shoulders. Everyone needs to be responsible for their own risk. Listen, I have little to no sympathy for persons that are liquidated on leverage. That's just my emotional sentiment. If you're exposed to leverage, you're taking on a risk, period. If that risk manifests, you did it. That's it, period. There's no one responsible for a position being liquidated other than the person taking on the leverage. Done. And so otherwise, you got volatility for W Memo and Wonderland, but man, they're just buying and buying and buying. And Danny took a massive hit, and Sifu's in there. They're all buying, and I mean the treasury is massive. The treasury is significantly above the market cap at this point. I don't have the chart, but it's significantly above the damn market cap. So the market actors have no idea what they're doing. The people that are buying and upset that the price went down for the very reason you're expressing frustration that the price went down because everyone thinks the way you do. If everyone thought, oh, this is an $800 million treasury that generates $1 million a day and we're going to get cash flow and there's no more inflation from the rebases, if everyone actually understood what the hell they were allocating capital to, it would be a very different market with regard to price actions. But literally, what you saw is the market telling us that the average actor involved with this asset has no clue the difference between their ass and their elbow. And that's expected, and that should be expected. You should expect most people to be filled with fear and anxiety and doubts, FUD, and all that stuff. And that's exactly why I tweeted yesterday. There are few assets that I care about, and the only assets that are rational for me to allocate to are assets that are highly sophisticated. You don't want to deploy capital to assets the general public deploys capital to because now you're with the herd. So I, as a contrarian in many regards, say don't follow the money. Do not follow the money. Look at what happened on Phantom with the VE DAOs. The position I would opt for is the earn min position to extract the capital from those people that are deploying capital irrationally, chasing the narrative. Even when VE, whatever it is, VE rock and solidly drop. The only thing I'm interested in is hopefully a single-sided min position that facilitates liquidity, hopefully with automatic speculatively cross-chain liquidity provisioning. That would be freaking extraordinary. Otherwise, I have a gut instinct. I've seen in earlier versions of the Rock contract that there was an AnySwap reference. Maybe that still persists. Maybe that was, hidden in some regards. I don't know, but we've had hints and talk of cross-chain swaps. AnySwap multi-chain, they've said we could do cross-chain swaps. There's a protocol called Layer 0, which facilitates single transaction cross-chain swaps. What is the next evolution of exchanges in the DeFi space? Seamless interoperability, seamless swaps across all the damn chains. You're on Ethereum. You want your assets on Ethereum, but you want your transaction to be cheaper with less slippage or better rates, so on and so forth, and you want to do it on Phantom. I take my Ethereum on Ethereum. I want to buy Phantom on Phantom, but I want the Phantom back on Ethereum. So, in many regards, multi chain, in my opinion, turns every other L1 into an L2, where Ethereum is used as the consensus layer. You don't have to leave Ethereum. You're just going to use the other chains for the transaction speed, the transaction price, the liquidity, the amount of people or market actors on those protocols on those L1s would contribute to liquidity, so you get better prices. So the scale and scope of multi-chain probably has the strongest fundamentals that I could see right now in the crypto space. FUD aside, and clearly it's not FUD. It's real. The security, the contract security issue they expressed, and the opinion of the auditing firm. That's real. That doesn't detract from the potential of the protocol. So that's why it's weighted where it is in the portfolio. That's the bottom line. Fenor, thoughts on Aber Wonderland merger? Potentially good. Very complicated, very sophisticated. I don't know how it's going to work out. And all I know is everything in my mind reduces to fuck you, pay me. If a protocol isn't paying you, people are going to sell the crap out of the asset. Taylor, I know. I fixed the screen. Yo, yo. Hey, Noah, greetings from Athens. Oh, goodness gracious. What a beautiful country, my friend. Sonos, Lal, how do you think Sun got his? Yeah, that's the deal, Sonos. By not necessarily degeneracy, he got in the right place at the right time. This is the most important thing. If you're going to make big money in the crypto space, it's not because you tried. It's because you have the right place, the right time, the right narrative, and it happened. The second you try and force it, the second you try and make money, you're going to lose it because there's going to be an actor that's going to capitalize on that desire for other people to make money. The predators, they're going to predate. Is that a word? Giltronic, no off topic. What are the chances of things escalating in Ukraine and how will affect markets? I think it's highly likely. Right now, it's a showdown. Um, I think it's highly likely. They're in a very difficult situation. Sovereigns, especially, everyone around the world, they're thinking 10, 15, 20 years out. And there's some real big complexities going on in Russia. Wonderland has no CVX. I don't know. I saw different metrics in that. Maybe the metrics that we're looking at is not necessarily correct. You need to own CVX to sell to the DAOs later. I don't give a crap about selling an asset to someone else. I want an asset to pay me to never have to sell it. A fund of funds, a fund strategy. Okay, now you're talking, and this is DeFi Legos. A fund of fund of funds, and accumulate capital, convince people to give you capital, sell assets that are manifested out of nothingness, use the aggregated capital to generate immense cash flow, pay people not to sell the assets. That's the deal. Wait, did I hear you right? You no longer see those protocol CVX redacted as a red herring? See these protocols? No, I have no interest in redacted. I don't want exposure to that model of tokenomics. Um, Wonderland is shifting in its implementation. I just don't want exposure. I know people with millions and millions of dollars of W memo, and God bless them. They're good people, and I think they're quite reasonable and rational the way they think. It's okay not to own something you may want to own, and this is a choice, and that's my choice, and that's okay, and that's to no discredit to persons that think otherwise. including potentially even redacted, considering what Tetranode does with the protocol. Um, but my choice for control over convex is Frax. We'll see what happens. A lot of people don't have the highest opinion. I think there's a reason why they control critical mass of CVX, and FPI is tantalizing from a monetary policy standpoint. I think the concept of their exchange is very similar to what Solidly is doing with MIM. MIM will probably be the base denominator for a lot of things on Solidly, and I think Frax is going to go for something similar with Frax. Um, so that kind of makes sense to me, and I like that. I want to see what they do. Vincent, watching Goodfellas tonight, when that scene with Paulie and them saying "fuck you, pay me," that's the best scene. I mean, everything in that damn movie is the best scene. What happened to your relationship with Humble? Never had a relationship with Humble. I talked to them once or twice, trying to give them insights into a variety of things they were interested in. I think I talked to them once or twice. I never had a relationship with them. What's your GMX strategy? None. I don't have exposure. Do you know where you can track the buybacks of multi? There is none. The multi is not fully launched in the VE model yet. Dr. T is in the house. Yo Vitalik was on Up Only podcast expressing concerns over security and cross chain activity. Yeah, it's a big deal. He believes it's safer to duplicate protocols in different chains versus sending tokens across. Very interesting. And his concerns are real. And I agree. And what plays out, we'll see. We'll only know in hindsight what will emerge from protocol implementation standpoint. We just need to let it happen. And I think 2022 is going to be a big year for seeing progress in that direction, Dr. T. That's what makes sense for me. Nigel, Noah for gods. Are you more interested in gods or IMX token? Neither. I have no interest in gods or IMX token. I have interest in playing the game. I have a heck of a deck. I think I have like a $20,000 deck at this point. It's fun. I got all these gold and these diamond cards. This is just so much fun. Hunter, what do you think about Ren? Ren has a moat that's beyond what most people see. Decentralized, disintermediated network of computers, VMs, and that's a big deal. As for its contribution to cross-chain functionality, cross-chain capital flow, they're clearly an underdog. And we'll see how it plays out in that regard. But my position is relatively small for my portfolio size. 1.78%. It's at 33 cents. I've seen it as high as $1.70. I bought it at 6 cents. So I'm in no rush to do anything, and I like my Ren VMs operating. And I have no, not even a drop of sentiment currently to get rid of them. Andrew, good morning. Kingsley, people seem to think yeah, there's nothing gets rich quick about this. This is get your money taken from you by predators quick kind of game. One curious view would be great if you do a stream on macro and finance outside the crypto space soon. Yeah, I talk about macro a lot, but I'm not, I'm not Raoul Pal. I'm not Jeff Schneider. I'm not Steven Van Meter. I'm not Brent Johnson. I'm not Lynn Alden. Woo! Lynn Alden, the beast of macro. I mean, even George Gavin has got it because he's talked to all of them, so he's obviously a compilation of all their material. So we'll see. Ben is in the house. Always a pleasure. Hope you're okay. RMS Rob, like Geome, is not interested in it. Glad to catch you live for a second time this week. Always a pleasure. Hilda's in the house. Kill us, predators. Oh. Raul, hello. We're going to wrap this up in a couple minutes, but I'm going to hit the last comments. Crypto Henry, I like the thought that cross chain swaps reduce other chains to L2s. Interesting, right? Saw the live. Had to check in. Thanks, Captain. You're welcome, Art. Hope everything's good. Crypto, but still, as long as Ethereum doesn't fix fees, Ethereum will never fix fees. Fees go up because of demand on the network goes up. If fees stayed low, demand on the network would not have a counterbalance, and you would have a load problem. There'd be excessive transactions. So the high fees keep the network load under control. Pav, cheers, Noe. Doing great. Recently rotated some stables around and I parked back a few months. Great stuff. 2022. It's the year of stable coins, and I think it's going to be a big deal. Liv W, what do you think about Arthur Hayes, especially his latest article? I haven't read it, but I know what you're referring to. We'll see. And the Fed is, Jerome is talking in an hour and 15 minutes. We're going to get a sense of what he thinks about how damn deflationary this global financial system is. In conclusion for today, it's just thing looks like it's ready to implode. If you look at the Eurodollar chart relative to the inflationary needs of the system, we haven't had monetary inflation in forever, like 30, 40 years. We have a problem. We have a money problem. There's not enough of it. So people don't understand that, which is exactly what Jeff Snyder and Tim Van Meter talk about, because they see inflation, the word inflation, but inflation applies to consumer prices. It applies to money supply. It applies to things discreetly. What is inflating? What is deflating? So we have a deflationary global money supply that is not keeping up with demand. And what do you need more money for? To service debt. What is keeping up with demand? Debt. What is not keeping up with demand? The amount of dollars needed to service the debt. It's a problem. The system is dying to crush and implode in on itself. I don't see. We'll see. We'll see what they do. I know what I see. By the way, weekly looks so bad. I'm glad I'm mostly stabled up. Be protective. Be protective. Thank you, Patrick. I appreciate it. Wednesday, January 26th at 12:46 p.m. As always, thank you, everybody, for joining me on this wonderful Wednesday. Tell everybody to subscribe to this awesome YouTube channel. It's pretty cool. After party on Discord, we're the most rational community in the entire crypto spaces. Links in the description. Y'all have a good day now. I'm going to see you again on Friday. Hopefully, my back's better. Peace.